Okay, we're going to do the last chapter of the section 2, book of prime entry. Book of prime entry also called book of original entry. This is the area to cover advantage of using the different book for the recording and how is the process to transfer the data in the book of prime entry, hosting to the ledger entry, and differentiate between trade discount, cash discount. This is more to on the cash book that you're going to do it. Okay, now next is that we're going to learn is the advantage of book of prime entry. Book of prime entry is a first recording. First recording means that the proper recording done by the account, which is we list down all the data according to the document that we have. From the source document is like invoice, credit note, debit notes, in statement of account, bank statement, check counterfoil. This is called source document. Book of prime entry, we have 7 books so that we only record similar transaction in a book. Therefore, easier for us to post to the ledger. Other term for this book of prime entry, book of original entry, or sometimes we call subsidiary book. The advantage of having the different book for the recording. First, fast way to get the total credit sales and credit purchases, where we can get these two amounts from the sales journal. This one we can get from, to get the total credit sales, we can get from the sales journal. Credit purchases can get from the purchases journal to get the total for the month. Okay. Next is that reduce the transaction posted to the general ledger, because this amount we don't need to record individual daily sales amount. We just take the total, so it will save the posting to the general ledger. And this will minimize the accounting error and easier to find out if the error happened, because this sub-ledger should have the same amount total in the general ledger. Next. There are 7 books or book of prime entry, got 7 types. First, sales journal, sales return journal, purchases journal, purchases return journal, general journal, cash book, petty cash book. For the explanation, I will bring you through, guide you through what is the 4 journal, sales return journal, purchases journal, and purchases return journal first. Sales journal is a list of name of business to which credit sales were made. Credit sales means that credit customer. Also referred to as a sales book or sales day book. This is another term that you use. When we sold, we record in the sales journal. When the goods returned to us, we will record in the sales return journal. A list of name of businesses, the value of goods returned from customer. So this is returned from customer. And the date which the return were made, also referred to as the sales return book or return inward book or return inward journal. Purchases journal. Purchases journal is a list of name of business from which the credit purchases. This is a credit purchases, which is the supplier, where the value of purchases and the date on which the date were made. It's also called the purchases book or purchases day book. This document, where we use it, where we get it, this is from the invoice received from the supplier. We base on the invoice received from supplier to do the recording in the purchases journal. Purchases return journal is a goods returned to the supplier and we record in the purchases return journal. This is a goods return to supplier. It also called purchases return book or return outward book or journal. This journal is written up using the credit note received. Take notes must be the credit note received from the supplier. Okay, next. I'm going to show you some example of the format for the recording. This is a format how we do the sales journal. The first column is a date. Name. Name is referred to the customer. This is a customer name. This is a customer name. That where we sold to, who we sold to. And come to the exam purpose. This is for the business purpose. We need to put in the invoice number. But for exam purpose, this one usually is ignored. We need to ignore it. We don't have the information for invoice document. Folio also the same. We don't need to put down the folio number. This folio and invoice number can be ignored. Amount. This is a net amount that we record in the sales journal. So end of the month, this amount will transfer to the sales account. This sales account is sitting in the general ledger. So take notes, don't get confused with the word sales journal, sales account. There are two different items. Okay, next. Sales return journal is the goods returned by customer. Then we do the recording. Same thing. The first column, date, name of the customer, and the credit notes number. These two normally were not required for the exam, but for business, yes. Amount, which is the net amount for the sales return. End of the month, it will transfer the total, this total, to the sales return account, also under the general ledger. In the sales ledger, we're going to record individual customer. Individual customer means that customer received the goods. This is customer received the goods. In exam purpose, folio don't need to put it in. Folio don't need to put it in. Only 6 columns required. And in the credit side, we will have the sales return. So means that this customer returned the goods. The rest of the customer have to record as per the actual date of the transaction. Sales ledger is record individual credit customer account. So later I will explain further. Come to general ledger or nominal ledger. We will record the sales account. Sales account is giving out, so it's in the credit side. Customer is in the debit side under the sales ledger. And sales return account will be in the debit side because customer return goods to us. Now you have learned some sales word. Just to clarify and make it clear, sales, you have heard sales account, and then sales ledger, and then sales journal. Sales journal is a first recording for the credit sales. The list of all the credit sales in a month. We do the recording. And end of the month, transfer to sales account. This sales account, where is it sitting? Sitting in the general ledger. Okay, so this word sales account in here appear, sales account. Sales account is in the sales account. is in the general ledger. So don't get confused. Whereas when we say sales ledger is the individual credit customer transaction. So we will expected ABC customer debit and credit transaction complete for ABC. So this one sales account is in general ledger. So take note there is a 3 different terms: sales account, sales ledger, sales journal. Come to the purchases return journal. These two journal or purchases account, purchases return account, and the purchases ledger. This also similar to the sales ledger, sales journal, but it's a recording for the credit supplier. So I explained the detail for the sales, but come to the purchases journal. We will transfer to the purchases ledger when there is a transaction related to the individual supplier. So here, this credit of the trade payable will happen when there is a transaction. But come to the general ledger, which is we only record the total end of the month for the purchases account and credit to the purchases ledger control account. Purchases return is a goods return to the supplier. That's why we call outward. Outward means giving out. But in the purchases ledger, we will debit the individual trade payable, which is a supplier, and the total end of the month will transfer to the total trade payable account, which is purchases ledger control account, and credit purchases return. So this is a credit purchases return. This is a debit purchases account. Similar to the sales journal sales return, because just now I have explained in detail how is it look like. So I will not go to the detail for this one. So when we do exercise, we will see how is the transaction link.